Alrighty.
And hopefully that's working. Let me double check. Excellent. We are on the air. All right. Welcome, everybody. We are streaming with Creedmoor this morning from money.net. And he is a former bullish bear. We honor and respect this guy. He is a really awesome trader. And we're going to put two heads together and do some scalping today. It's quad witching day, and we're going to have a blast one way or another. So let's get to it.
Uh, Absolutely. And good morning to the money.net family as well. I have a special guest on today, Jeremy from
Morning,
the
Jeremy.
BB. For those unaware, I was with the BB community for, 6 years, 5, 6 years, something like that, helping people trade. And, I asked Jeremy the other day if he'd want to come and do Friday stream with me today because we got an interesting day today, Jeremy. It is quad witching, and we have a unique environment coming through today. What are you seeing in the markets thus far?
Oh, just nothing but red bars, man. This has been great. It's kind of getting to a point where we're building momentum, and it's kind of unusual to have it in a pre-market like this. Usually, it's in the witching hour, the last hour, it'll start to do some fun stuff. But right now, we're seeing it just moving pretty south. Yesterday, we were looking at SPY, and we realized that 390 was the critical floor, and then 388 was like the last hope, and we're just under. We're currently at 38.66 on the MES, so we're heading south. And there's a
You know, it's interesting overall. We've been saying it for a while here at money.net that this is not real buy, not shares, not long-term investing, stuff like that,
right.
but this is more the options market. And today it truly is primarily the options market that we're seeing. And it is a little interesting that we're seeing this much volatility this early. But I tell you what I'm looking for is a little bit of a downturn this morning and then a squeeze up as we see that forced closing. I mean, what do you think for what you're seeing? You think I'm off tilt on that?
No, I think you're dead on. I think we will see a squeeze towards the end of the day. If this continues to go this far south, it's got to return to the center of gravity, so to speak, by the end of the day. It usually would do something like that when you've had such a big move. And I was going to break out the large version of the 1 hour chart on the MES, just to kind of show you
I
what I'm
like it.
looking at.
I like it. Let me share my screen, or there we go. All right. So if you want to share your screen and show everybody
Sure thing.
what you're seeing here.
Let's see if I can get it to work. There we go. Now I'm sharing in three places at the same time. So what we're looking at is we've got quite the big old bearish bar here on the 1 hour chart, and I've been marking out a lot of these lines here for a long time now, and this looks a lot like a big setup for a measured move, and we've achieved the half of that measured move right now. And if this continues, I mean, that takes us all the way down to about 37.80 and maybe a little beyond. That is pretty intense of a move there, right? So when you see these measured moves and you see that accumulation and then breakover, we were doing some bearish trades yesterday and doing pretty good with it. As far as crushing all of the critical support levels, it just kept on chugging. Well, here we have a leg. If you zoom in, actually, there's a measured move here, and we're setting up yet another one within this whole thing. So kind of interesting how you can plot those and figure out how far it's likely to go. And I've got another pivot line way down here that we can extend to see that. So I think we're pretty bearish this morning. I'm surprised to see it moving in the pre-market like this, but it's definitely not looking good for longs.
And that's the thing. I sold a decent amount of puts yesterday, but also sold some calls on Baba, Neo, and a few others in there. How do you feel about the Asia sector as we move forward in the markets over the next coming days?
Um, well, I mean, there's a lot going on over there too. I mean, there's pressure on every side of this, and then you throw energy in the mix, and it's all politics. But as far as that pressure on our market, I mean, the Earth rotates in such a way where Asia gets hit first, and it bleeds around the globe, so to speak. And then if you look at the European market, it wasn't doing so hot this morning either. So
No. I'm looking here at the euro dollar, and we're sitting at 9955 straight on that one. And it seems that I mean the euro used to always trade a little bit above the dollar here, premium to the dollar, and what we're seeing right now is just an interesting environment for Europe itself, the UK. I mean, all of them are getting double hit between the weather, the fuel prices, and then with the Queen passing. Right now, I would not want to be a European citizen at the moment. I don't care how good the healthcare is because they got a lot of stuff moving forward into the winter. I'm hedged out with nat gas contracts. What are you thinking as we move forward on that?
I was looking at some nat gas, and that ETF UNG was looking pretty good, but then it started to pull back a little bit south of the support level. Let me see if I can get that screen up here. Somewhere. I haven't even opened my my equities trading page just yet. Let's
You know,
see.
and that's the thing about it is we're seeing so many different ways to play this. I like playing it with the straight futures contract, but I've
Yeah,
also been playing LNG,
Jeremy, can you hear
UNG,
me?
etc. And it's
yeah, but
interesting
one
to say
second.
the least as we're seeing this.
Sorry, we're actually live in our Discord channel too, and occasionally we'll get some crosstalk. But um, I can hear you guys. Just we're kind of doing something a little different today, and we're essentially collaborating with Creedmoor over here at Money.net to run the show today. As far as gas contracts go, yeah, I mean, if you're looking in futures contracts, I mean that's a bit of an expensive trade for my account size, so I'm into the ETFs on that. But
Mhm.
there's certainly some opportunity there. And gosh, when this was starting out, when like the energy companies, I want to say it was like probably about the beginning of July, I saw some articles where energy companies were anticipating doubling their price to their customers for natural gas. And I'm like, that seems a little strange. What's the chart telling me? And I look at the natural gas futures chart, and I'm like, oh, nice. This is a clean reversal. Yeah, I can see a 100% increase on this thing immediately. And I was looking at it and I was like, well, it's a little expensive for me to trade contracts on, and there is no micro for natural gas futures. Let's look for an ETF, and that's when I found UNG, and that worked out great. That was a very lucrative trade. I think I've done enough with that to cover any increase in my own natural gas consumption. So,
I like it. I like it. You know, and that's the thing is there's always a way to trade something in the market. You can
oh
either do it
yes,
through an ETF, a futures contract. For me, though, I always tell people don't trade triple leverage stuff if you're a new
no,
trader because it's a very manipulated market overall, and it's one of those things that so many people, how should I say, they end up blowing themselves up within the first couple trades because they don't understand the generalized market. And that's something I like about the BB is that you guys are also teaching people, hey, you got to understand what is going on within the market. And I think that's really important.
yeah, absolutely. And it's you put it on a scope and you kind of look at the way things move in the long term, and that's how we determine whether we're going to take a short-term trade on it. So we're always looking out, on that weekly chart, daily chart, hourly chart, 30-minute chart. We're just zooming in on what the price action is telling us. And when we look at triple leveraged ETFs, almost certainly when they spike up, it's just awesome to sell credit spreads at the top of those because they're leveraged and they are an expensive operation to run. There's like management fees. There's lots of time decay in what they're using for leverage. All these factors play into that, and typically they're a depreciating asset, so to speak. So I always watch those leveraged ETFs to spike, and then I'll sell credit spreads at the top of all of those. It's awesome. So back in the day, we used to do that with what was that? The one that it was like UVXY, but it was the other one.
Oh,
I think I got
there
delisted.
was you guys, D guys, and then there was the triple Qs. You could do the T triple Q. I would
Yeah,
sell that one as well. And then I would also do stuff on oh god, it was a currency spread. It's been so long now. The Nika spread on that one as well. So there's so many things that when you see an unnatural volatility spike, you're able to take advantage of that. And for those that are in the penny stock scalping world, it's kind of the same thing. You see a huge sentiment move up, they nail the top, and then you just short it and play it down.
Yep.
And it's unique how that opportunity is available across so many markets.
Yeah, we kind of cut our teeth on penny stocks as far as some of the people that we've been teaching over the years, and we find that the price action is very similar to how some of those extremely volatile moving ETFs trade. And then you compare that to like the 10-second chart. I'm loving to scalp on futures. It becomes apparent that all price action kind of works the same, except with penny stocks, they're often highly manipulated. So when you see them break down, they usually break down quick and dirty. And if you've got the capacity to short those, or even if there's an options liquidity enough to be able to be in a bearish position on those tops, man, it's just amazing because you'll see these, they'll pop up, and even though they pop up fast, you'll see that they kind of take the stairs getting there, and they just take a big red candle down like they jumped out the window. And you get into the right kind of penny stock doing that, you can really clean up really quickly. But in the day trading of it, most of the newer traders aren't really in a capacity to short shares. So we teach how to ride that volatility up and know exactly when to get out before it does take a turn to the south. Being able to be a strong bearish trader helps us to teach people how to take their profit at the right time because we know when it's going to snap over.
Well, and staying nimble within the markets too, because
Yes.
it's one of those things that some people just get stuck within a bias. They go, oh, it can only go up, it can only go down, etc. And that's just not true. They're gonna go both ways when it happens. Statistically, that's what they've always done is they go left to right and up, but there's a lot of ebb and flow in between. And if you identify those particular business zones, so to say, you can absolutely take advantage of that. Great example being HKD or AMTD. Both of those over the last couple of days getting a nice little run out of those and was able to get a small trade on that. And it's one of those things that just because it has a move up does not mean it's going to super squeeze. I saw a lot of people going, "Oh, they're going to super squeeze." I'm like, "No, no, not on this one. They already had their super squeeze." And I saw a lot of people jumping in, which I think is what caused those several halts on HKD, etc. HKD, I spotted it at I think it was like 153 or 157. Next thing I know, it's back to 300. I'm like, well, I'm not going to get long, but me and another guy in the community there, we were ready to get short on those and shorted them down for a little bit. And, you claim your profit and you move on to
Yep.
the next thing.
Yeah, it's just and it's amazing how fast you can do that. And when you've got enough chart time, you can recognize those at a glance and be like, I know exactly where this is going to go short. And yeah, it gets to a point where you can do it without thinking, and you just kind of know. And you get some of these meme stocks moving around and stuff like that. And I mean, it always gives me a little bit of a heavy heart to think about all the people who are chasing that and just following what someone is saying instead of learning how to see it for themselves. And there's people who have been long in those assets, like AMC and GameStop for way too long, and they're just like, it's gonna squeeze, it's gonna squeeze, it's gonna squeeze, it's gonna go, $1,000 a
Mother of
share or
all,
whatever. And
yeah.
I'm just
Yeah,
like, oh, that is so disheartening. But there's nothing I can do about it, but teach people how to see it. I mean, that's that's the only way I can pay it forward. So that's why I love doing
absolutely.
this. Um, I was telling a little story on our after hours show yesterday that didn't go live, but we did it in the after hours edit that we'll put together and put all the gems together. But anyway, there was a person I know who worked for a company for a little over 20 years, and she had 30,000 shares in the company in her 401k, and I talked to her last in April, and at that time she was worth, her 401k was worth $6.4 million. I kid you not. And now, at that time, I was telling her, you need to do something about your 401k and talk to a financial manager, financial planner, somebody, move some assets around, go buy some, something that's durable, like rental properties, whatever you want. But ideally, you need to do something about this because I don't see this market holding up this trend for too long. And Sure enough, now that asset is worth $1.4 million less than it was in April now,
Hmm.
and I'm just like, oh man, that just breaks my heart. So, uh,
And that's the thing with 401s and everything. A lot of people just kind of set it and forget it. And that's
yeah,
good to an extent. My rule of thumb is I check mine and I do adjustments once a quarter
right.
is what I do because I run on a seasonal dynamic of things. And so if I know we're going in the summer, I move
Hey,
some stuff
good
over into
morning.
summer stuff, winter stuff,
Morning, Snow.
etc. And
Got a little
and that's the
sniffle. I'm
thing
trying
is
to.
though with 401ks is a
How
lot
do I
of
get
them
in?
you do have to set it, forget it because there's a longer term idea
Are you
on it.
streaming?
And but also knowing
I
when
will be.
to pull capital.
All right, so you're gonna stream in the voice?
Yep. Sorry about that. Yeah, and
I just
that's
trying to figure it out. Okay,
that's the other
that's
part of
the new
that
thing.
is you're looking at the ability to make those adjustments is fairly limited in a 401k, but it's still possible. What I know some people would prefer to do is to go and divert some of that or even roll the whole thing into a traditional IRA where you can actually sell options against that position in an IRA and generate income from it that is, in the same tax rules as the IRA. So kind of a cool thing you can do. Would you have any other idea on what you could roll into? Because a lot of people, that's the first thing they worry about when they're moving their 401k around is they worry about the taxes involved in moving that asset to something else.
So again, this is
What are
not
you
advice to
talking?
buy or sell anything, but when moving things around like that, you can do a lot of stuff with secondary ETFs. And what do I mean by that? So you got like the XLF or the XLV, et cetera.
Right.
Those are actually derivatives of the spider. So a lot of people know the
I
spider. So you
can't
can,
hear him.
let's say you want to get
Yeah, Stone,
heavy
he's on the
on
YouTube with him.
financials, so
So if
Uh,
you're
JP
on the YouTube channel,
Morgan
you
and
can hear
Goldman
them talk, but
Sachs,
I
et cetera,
can't because my
go to the
audio on this thing
XLF
is so screwed
and
up that
you can
I'm just
actually
hearing
still
feedback.
have your
I
broader
thought the
market with
YouTube
the
channel was
SPY, the
delayed.
NASI, but then you can
It
get
is, but
heavier in other
Oh, I can't
assets.
watch
Right
it
now,
then.
been a lot of
I can
focus
hear
on
Jeremy on here
metaverse
and that
and
channel,
in
and I
the
can't figure out how to
gaming
turn them off
sphere, the next
on
technology
or
gaming
to
sphere. That
hear
was our
that.
sector call a
But
couple
he's
days ago.
basically doing like an
Uh, and that's something you can get in when it comes to both private and market investments. Now, what do I mean by that? Well, a lot of these companies, if you're really interested in companies, if you've got 50, 100, 150 that you just need to place somewhere, call them up and you would be surprised how many companies have capital raising going on pretty often. And you can buy shares in these private companies. I was just approached by a friend of mine and a friend of money.net that for their particular company, they're actually doing a money raise at 10 million. And he asked me about it. For those unaware, I do manage a hedge fund outside of this. That's what I do, and I built my fund together to help the average guy or gal to yeah, right, to help the average guy or gal be able to do things like that. And they're known as alternative investment funds because a typical fund, um, they stay very, 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 very safe on things. But when you want a little bit more exposure to more unique things, that's where you come to guys like me. And you go, okay, well, I want to get in this sector, but I don't want to invest in markets. I want to invest in private company A, private company B, and we help you figure stuff out like that. But it's one of those things that there are 10,000 different ways to skin this cat.
Yes,
It's
there are.
just asking the right questions. I heard one the other day. For those unaware, as I continue to do the interviews, I'm developing that, and it's ask good questions, receive good answers, and that's true for almost everything. I don't care if you're going for a job interview, a trade, or something like that. You may say, "Well, Creed, how the heck does that? How does that matter to trading whatsoever?" Well, if you ask good questions about the trade you're about to take, where is the business zone? Where is the support? Where is this? Not, I think it's here, but where is it? And then you get the answer to those questions. Well, guess what? You now have a clear cut example of, okay, X, Y, Z. I know it's going here because of this. I know it's going here because of this. And you're able to support that idea. It's nice to have thoughts, but it's better to have action. And
Yes.
that's kind of the big thing. So,
And we actually encourage our members to approach us with questions in our live streams, and that's a great way to expand the ability to teach people things. Um, a moderator isn't going to always know what questions are in your mind unless you express them to them. And when we're able to answer questions, and there is no such thing as a dumb question, by the way, when we're able to answer
No,
these
no, there's
questions live for everybody, everybody benefits from it. So
Mhm.
you might be the only guy with enough well, enough ability to be like, okay, well, I'm going to ask this question. I hope it's not dumb. If you have any anxiety about asking a question, just know that there are no dumb questions. There's every level of trader in our group, and if you're asking a beginner question, a lot of those other beginners are going to benefit from that question and that answer. So ask away, and
You know,
that's
I gotta have a caveat on you. There are almost no dumb questions because I've
almost
done
yeah.
this long enough. Yeah, because I've done this before to where you'll give somebody advice on that aspect of trading and they'll still come back. I love people asking a question for the first time. But if you're the same person that has asked me the same question 6 times and you refuse to accept the answer to the obvious question, then
Right.
yes, it's a dumb question after like the fourth time. Then I'll be like, yeah, that's kind of dumb. So yeah, I've seen it though. Well, and the idea of that is, should I take profit? Okay,
Right.
well, if you're a new trader, you're not going to know that. You're not going to know there. But if you've been in it for a few months and you've already heard it 30, 40, 50 times of, all right, when you're up 10%, you're able to pull your initial. And then you ask it, you go, well, should I pull my initial? Yes. That's always a yes. You always pull your initial.
hmm
If at any point in time you can play with house money, OPM, other people's money, always play
Absolutely.
with house money. Yep.
I do that a lot with my debit spreads, where like if I'm rocking a position in a debit spread with 10 or 20 lot, I'll go, and if I reach my goal, first off, my entry is typically 8 to 1. So if I enter it 50 cents on a $5 wide spread, I'm gonna absolutely sell at least half that position at $1 because that essentially covers the other half of the position for a risk-free ride to a little bit higher. And my secondary target is always typically about 120 to 150%. I get that little extra squeeze out of it, but it's like a rent-free position at that point because the first half of profit taking is already negated any cost in the other half. So occasionally I'll do that and have an issue where it pulls back and I might not have enough time left in the contracts, whatever. Sometimes I'll end up selling half of it for 100% profit and then the other half at 90. I'm okay with that because it's still house money and it's still a what if. If this trend continues, I can continue to make profit on it. So that's absolute. When you can get house money, it's a neat thing. And then recently we've been teaching strangles, and the cool thing about strangles is they don't have to stay strangles. There's many ways you can trade those, and whether you're holding them overnight or you're running them, just a day trade scenario, whatever it may be, time does not necessarily matter on a strangle. What matters is price movement. And if you notice that price is in a nice sideways dynamic channel, it's respecting 2 pivots very cleanly, you can take advantage of that because you can take a long strangle that's like at the money on both legs and use that price action to sell the next strike above your long position and oftentimes cover more than your long position is, what you paid to enter it, by selling an option outside of it against it. So it starts out as a debit position and then ends up as a net credit position, even though it's built like a debit spread. So it's kind of a neat thing to do. You can leg in and out of those. And the idea with that is if you've got, particularly we've been practicing these on forward. If you've got a week to expiration with forward, the time decay is relatively mild in that equity.
Mhm.
So you can roll these options week by week. So like if we're holding next Friday, we would probably want to liquidate those and roll them by Wednesday or Thursday at the very latest, typically. And when you can roll them out, you can roll those legs out with it and just buy them, sell them, and you're literally generating income on a long position for a net credit. It's an amazing thing to be able to do. And then when it does take a big movement, you're locked into your long position. You can take and close the short position and ride the momentum. So it's a constantly adjustable strategy, and it's a strategy that you can do with relative ease once you've got practice, at least just trading basic strangles. So it's
You
a
know, and that's the thing that I love about options is that you can get creative with the way that you're working with it because
yes,
options also allow you to add shares as a dynamic, doing
yep,
covered calls, covered puts. And then I've actually known people this one took me a while to understand, but they would run it was basically a covered iron condor. And
Yes.
it took me a little while to really wrap my head around it. And it was a covered iron condor that was basically a short-term leap. And it really bothered me because they would sell and buy the covered sections there for the condor,
Right.
and then they would sell against that position as it moved forward, but also intraday on the same asset, buy or sell shares on it. And I basically needed a diagram. I mean, I was like, all right, pretend I'm in eighth grade, dumb this one down for me. And finally, they actually drew it out for me. I went, holy heck, that is awesome. But it was the equivalent of looking at a wiring diagram for a freaking Ford Pinto. And like, why are the lights connected to the tail switch here? It's like, doesn't make any sense.
Right.
So it was unique.
Yeah, you get into stuff like that, it does look confusing and confounding on paper, but when you once you start learning how to build and tear down these positions and adjust them on the fly, it just becomes very natural. It's just like riding a bike, and it's like having a routine that you do every day, or whatever you want to call it. But essentially, it makes it so that you have the ability to change with the leaves, so to speak. You can adapt to the market in any conditions, and you can make money in any direction. Even sideways is a direction. So there's a lot you can do with that sort of thing, and having that flexibility with options that you wouldn't have with shares is just incredible. And then you can modify, like I like to modify the wheel trade strategy in many ways, very similar to that, and throwing in shares and stuff like that. Also having cash covered puts involved. I mean, there's a million ways to adjust that position too. So you can keep it steady and straight, or you can run with some complexity. It's completely fluid. You can do whatever you want. And then there's always a way to literally profit from the time involved in it too. So I love selling
You know,
time.
and that's kind of a big thing is selling that time in a good manner. I was talking with Andy Constant yesterday. He used to do some stuff with Bridgewater, now runs Damp Spring. Very intelligent guy, very unique individual. And it was the idea though of when you have somebody with an engineering background, a quant background, a very technical background, is being able to stay linear on an idea, but think broadly enough to work with that market. It seems a lot of people are one side or the other. It's very difficult to find somebody right in the middle that can stay linear with an idea, but go, okay, well, we've got this macro concept, that concept, and this concept applied to what's going on. And that is something that we need to be able to work with in the market.
Absolutely. It just gives you essentially a whole box full of tools to choose from, and you even have all the specialty tools for just assembling and disassembling the complex stuff all in one place. And yeah, anytime you're building the ability to adapt to that market in any way, shape, or form, you're gonna have nothing but benefit from it. It's gonna take some time. You'll of course have to learn some stuff the hard way, unfortunately, but yeah, there's plenty of ways to run this market.
Absolutely. So speaking of that, we got 1 minute till the bell
Yeah.
here. What are you thinking? Dip down, then rip up, continue dip down, or do you think we're just going to stagnate after about the first 10 to 15 minutes of the market here?
You know, Traditionally, if you look at previous quad witch days, sometimes you'll get oddly enough, half a trend day out of it, and then a revert to the open. So um, it could probably dip down. I would say there's support there at about 38.60, just in the short term, right down to the Globex low. And from there, I'm going to be interested in seeing if it's going to bounce there or not. But I don't see it going straight to the Globex high on the bell. But let's see what happens.
I like it. I like it. As far as small caps too, I'm watching CLEU, Charlie Lima Echo uniform here. Nice little rise here in the pre-market, and I'm seeing a lot of chatter from a bunch of other chat rooms on it as well. So I do believe this one's going to get pumped pretty hard today. So I'm keeping an eye on that one. We got 4 seconds till the bell here coming through.
Woo.
2 and 1.
Look
Send
at
it.
that
All
move.
right.
No kidding. I guess we're going to nail that. All right, where's resistance here? That is one big green bar all of a sudden. That's a 10-second chart. That's zoomed way in. My 1-minute chart
Alrighty.
says there's angular resistance, or 5-minute chart says there's angular resistance here. So let's see what happens.
So I'm closing out a few trades here.
Oh yeah, I got
Closed out of my Netflix.
I got some spreads to rock out of, man. This is intense.
Yeah, I just closed out of my Baba, Netflix, and I'm trying to close out of the Neo here.
Wowza, I am killing it all of a sudden. Let me close these before they go away.
There we go. Nice movement here in the markets. We're seeing here forced liquidation because of quad witching here. Current trade on the Qs 286 here, 287.25 and pushing here. Qs looking good. Again, I'm holding off just a oh yeah, you know what? Let me go ahead and get into the voice chat too here for the Discord.
Sure.
There we go. I think I'm there. Yep. Alrighty, there you go, peeps. You should be able to hear me in the Discord too. Sorry, I'm smart enough to work half of what I'm doing. So
Quite all right. Actually, you're in the wrong one. We're running up in the if you go up the menu there, we're in the live streaming tab there. Down at the bottom of that, you'll see a voice streaming channel or voice live stream. Yeah, it was a comment. I can hear Jeremy, but not Creed. That's probably an interesting conversation you're listening to on that end, guys. There's something missing there.
Let's see.
Man, I've got a spread on SPY that's just murdering it, dude. This is awesome.
So it's chat options, futures, and then
You go above
voice.
that.
There we go. Yep, I got it.
You'll see a big parade of people hanging out. That's us. There we are. Gotcha.
There we go. Unmute.
Excellent. And ordinarily we'd be having back and forth conversations, and I'll probably open that up in a little bit so we can all talk together. We'll just have to keep it a little less crowded because there's going to be a lot of conversations going on in a few minutes here. And I'm looking at those forward puts too, man. It is pretty cool. we were legging in and out of the strangles on forward, and just doing amazingly well. Let me see here, chart settings. For some reason, when I open Webull, it's dumping all my my settings. I gotta redo them every day. It does that once in a while after an update. So,
and that's the interesting thing. We've been seeing that happen with a lot of performers lately, as far as the trading platforms, the more minor platforms having a lot of issues, and even the bigger platforms as well having issues. It's unique.
I had an issue last week. Well, it may have been my fault, but I was running the September expiration MES contracts, and the price was off by like $15. I'm like, what's going on here? Well, when I had entered, I was entering on the wrong data, so I was looking at the December contracts and trading the September contracts. I'm still kind of new to futures, and that just kind of caught me by surprise that it was time to roll it sooner than I thought. So
yeah, it happens when you're working with it like that and getting used to the contract structure. Right. Overall, it does take a moment to get used to everything. I'm trying to close my Neo here, but they're not wanting me to. They're not letting me close it. There's no volume on it. I sold the 22 call yesterday, and current trade on Neo is 21.19, and man, they're not letting me. They're not wanting to let me close it here. No volume coming through.
Yeah, that's a liquidity issue. Here we go. We're going to take a trip south for a minute.
South of the border. Let's go for it. I love Mexican food. It's good stuff.
We're going to approach the Globex low here in a moment, I think. Mm-hmm. I'm going to wait and see what happens when it gets there, because I'm very curious to see if it's going to smoke that or if it's going to bounce off and give us a quick bull run. We do have a descending trend here just from looking at the 5-minute candles, 6:50 a.m. where I marked the top of that trend with just a simple trend line. And we like seeing those as descending channels, and occasionally you'll see one where you get a quick 50% retrace out of it. Those are becoming popular again, by the way. We've been trading all sorts of patterns, and we see them kind of rotate through the futures chart. It's interesting. So like these descending channels and rising channels where you get that pretty predictable 50% retracement kind of went away for a while, and then we started looking at the structure and we're like, oh hey, double bottoms are in style. Okay, we'll run those. So
Been a lot of double bottoms. Yeah, I
yeah.
agree with you. Been a lot of double bottoms lately.
And what's cool is like we can trade double bottoms in both directions. We can go and scalp the little bullish move in it, and if it's in a longer term bearish trend, we can use that as a peak to sell short on and roll down with a much higher efficiency on our trades. So that really gets exciting when you start spotting the patterns, and you can start seeing exactly when to enter and exit by using the 10-second chart, but verifying everything on your longer term charts. Man, what a difference in your trading that makes.
Well, and that's the thing, like you mentioned, the confidence in what you're seeing. I think that's very important. A lot of new traders miss that as well. I mean, I've been doing this for 10 years, and there's still some assets that I'm a little wishy-washy with. Like if I'm trading a different currency pair or something like that,
Right.
because I don't trade them as often as I do other things. Now, when it comes doing euro dollar, euro pound, yen, etc. I'm pretty confident of those because those are the majors. But if I go to something odd like the franc or something like that, then it gets pretty spicy because I don't trade it all the time. I don't trade their market all the time,
Right.
and it can definitely get unique.
That's kind of my standpoint is I just stick to what I know, and I'll expand a little bit here and there and go into other markets. But for the most part, if it's a market I'm not very familiar with it, um, my time's kind of limited for how much I can spend learning new stuff. But I do still get out there and learn it. And for me, it's been so much easier to just kind of stick to what I know and trade it, just over and over and over again. That's why we love Ford so much. It's just easy asset to teach and to trade on. So what it comes down to is if you want to explore other markets, just basically look at the structure of their major futures, so you can see what their general sentiment is in those markets, and that'll help a lot with your local trading, so to speak, if you're trading in this market. Because, like I said, the Earth turns, the market moves with it around the globe, and all those times are going to be significant. We happen to be in a spot where we can see what the Asian market does, we can see what the European market does before our market opens. So it makes it much easier to catch global sentiment, and then you can kind of pick up the key points of like what's going on in the world that's going to affect prices here today. So it all comes to a center, so to speak. So if you're looking at that market as it rotates around, you can kind of, before you go to bed at night, you can kind of peek over at Asia and see, okay, well, this is interesting. And if you're a night owl like me, you can even look over at the beginning of the European market and kind of catch some of that stuff. And then you can go and realize what our futures are doing in reaction to it, because our futures trade overnight, so you can kind of get a great idea of what to expect for the sentiment the next morning. And last night I was looking at this whole situation with going into the close. We closed, let's see here, right at 4 o'clock. We're right about 39.18, 39.20, somewhere in that neighborhood. It ramped up in the after hours just a little bit, and then as soon as everything started to settle, it just went south. I mean, it broke and gapped down, and I'm just like, man, my puts are gonna kill it tomorrow. So worked out great, but I was able to just kind of keep an eye on that. And as I was watching the Asian markets open, it was just kind of like, wow, okay, yeah, this is gonna basically circle the earth in a bearish trade mode. So
And that's the thing. There was a point in time where I basically didn't leave the rig, is what it was. I would leave the rig long enough to just to get a good nap to keep my mind together. And I still, on average, get about 3 to 4 hours of sleep. But I was literally trading every market. So equities market would close. I would go over to the standard futures, so oil, soybean, bond futures, etc. And then I would also go over to currencies. And let's say I saw an econ report coming out for Japan. I'd actually have everything stationed together, and I'd get like 20, 30-minute breaks, and I would just play news breakouts on the currency futures, and standard futures. And you would be amazed, one, how wore out you get, but two, there are a lot of movements in the evening session in other markets that you can play even as a US citizen on that and still make money. But you also have to have an understanding of global economics to be able to take those trades and understand why those reports matter.
Right. No, it's this news moves the market quite a bit, and with my style, I'm more focused on technical analysis, so I'm always trying to be at least aware of the major news events. But oftentimes, I can kind of see the sentiment in a chart before the news even comes out with it. So you get to focusing on the short-term charts like I do, and you can see the moment things are about to happen. And my gosh, every time JPOW is about to step to a podium, you can see what the chart's telling you. It's like, sit on your hands for a minute, sir. So you can
Oh
kind of
God, yeah.
you get that sentiment. You can see it coming, and it's kind of neat because you can take a neutral position going into those sometimes and just make a killing when that explosive move happens. The moment that microphone is up in his face, it's amazing. But you watch some of the other major news events, like back when the invasion was first happening with the Ukraine. We were bearish on the news going into that conflict, and then the old adage goes, always buy on invasion day. And sure enough, man, it just sprang to life. So it was kind of neat because we were able to capture that move on the way down into that and know exactly when to get out and flip our positions and roll it into a bull mode. And the chart told us everything in spite of the news. We were aware of the news, but we could see preemptively just before it broke on the news, we could see the chart reacting to it, which was really cool.
And that's the thing, is understanding those dynamics. I've still been waiting on something to happen with Taiwan, and I'm keeping a close eye on
Yeah,
LMT, Lockheed Martin, as well as Raytheon and Honeywell as well. And it's unique to say the least. And it makes you wonder as we move forward in these conflicts. Um, it will uh, it will get even more unique on this, because it's not just going to be your normal wartime stocks, but we're seeing them send and print more money. And I almost wonder if Ukraine is being the tester so far for them to then send, I'll call them war packages over to Taiwan as well. Because if we can
right.
do it with Ukraine and Russia, then are we really going to be that scared to do it with Taiwan and China? No, not in my opinion. I mean, we even saw Nancy Pelosi fly over, spend the night in an Airbnb, have some food, and then she bounced the very next day.
Yep.
But they did it. I mean, that was I will call it a flyby, flip them off, and then move on. It's
Yeah.
exactly what that was. And that's the non-graceful way of saying that, but it is true. Um, I am very curious as the Ukraine conflict comes to
Here we go.
a closure, so to say, because there's still always going to be conflict on the pass and a few other things, especially the ports. I do not believe that Putin is going to give up those ports
No.
easily. Um, but as we move on to other conflicts, we go, oh, but we're not going to leave that one. Look, we still have conflict going on in Libya, Cabal, a whole bunch of other places that we're involved with, that we've been involved with for 30 plus years.
Yeah.
We'll always have some support over there in Ukraine. But I'm curious what's going to be the next hot conflict, the next media conflict that's going to come through, and I think it's going to be Taiwan. So I'm keeping contracts loaded on that.
Yeah, it's definitely good to be aware of that, and then knowing the culture too is a little important. One of the things that culture typically is very well strong about or bullheaded about is saving face. And when you go and you slap that face over there, you fly by and flip them off, so to speak. Uh, you almost expect a reaction towards that effect where they want to go save face, but they haven't yet. It's just kind of like building tension. You can kind of hear the crescendo. It's coming to some kind of head, but it's just a matter
It
of
is.
when is it going to pop. And I can see a great advantage in having a fairly neutral position, but a strong position that you can take advantage of when it does pop. And that's what's great about teaching the strangle strategies, because you can train how to take a neutral position and turn it profitable. One of the first questions I've ever had when I was telling people that it's a neutral position was, why the hell would you want to trade a neutral position? Well, let me tell you. So,
Yeah. Well, listen here, buddy.
exactly.
Yeah.
It's a profound question, though, when you think about it. It's kind of loaded. Like, why on earth would anybody in their right mind want to take a neutral position on the market? Well, there's conditions for that, and if you've looked at the recent volatility, it's a godsend to have that ability, because that volatility is going to pay your bills if you run these trades right. There are times in the market when it won't be appropriate to trade a neutral position, but for now, neutral positions are awesome because it's lowering your risk. It's putting you in a position where you can take action on either side of the trade, and also with leveraged assets like options, you can take advantage of a lot of that move when it happens and be ready for it even overnight. So good things are coming from that. And I think once things pop off over there in Taiwan, it's going to be an interesting market for us and them. So having those feelers out, and you can always roll these down the road too. You can roll them a month out, a year out, whatever you want to do. But it just gives you such an opportunity to take advantage of the volatility when it happens. You get ahead of it.
And speaking of volatility, we have Michigan consumer sentiment coming up here at 10 o'clock market time.
Uh-huh.
What are you thinking on the numbers there? I mean, how do you feel about the consumer sector right now, man?
Well, I'm watching that, as you may know, the consumer credit sector, to reflect what's going to happen with that, and it's looking like. Let me get back to that equity here. MA, I believe it was Mastercard. You look at the daily chart on that thing, and it's just kind of grinding in that trend or in that channel. But it's looking like it's going to threaten that key support. I was looking at Mastercard, MA, and critical support is about 310 on that thing. If it cracks that, that's going south. And along with it, consumer credit is going to directly reflect consumer sentiment on, consumer spending habits. So that kind of gives me a precursor to what's going to happen in that sector. And I think we're not going to be impressed with the numbers. Just to say what I'm saying it without looking at the actual numbers, I can see that I think that it's going to be a little bit of a miss. So
Yeah, and I'm looking here. So previous on consumer sentiment was 58.2, expectation 58.6. I think we're going to come in a little bit lower. I'm going to nail a number of 58.4 on that. And then looking at 5-year inflation expectation, they've been saying 2.9 across the board with expectation of 2.9. I think that's going to come in line. I think that'll come in line, but I think True Blue consumer sentiment is going to be about a little bit above last time, but definitely not going to meet expectations. And for those on the money.net platform, all you have to do is go up to your economic insights and you'll be able to see that. Just click on menu tab up there, news and calendar, economic insight, and then hit today, and it'll show you all the news events coming up today on there. Man, market's starting to chill out here. I like that. I think we're about to get that reversion move as we come into sentiment.
we might.
Um, that's going to be the big kicker on this, is how that sentiment comes through. And if we have good numbers, I think if we have static to good numbers on there, we'll get a reversal within the market. But if we get bad numbers, we'll have to continue a little bit lower on here, because they're going to have to do some more to curve inflation and weaken the dollar a little bit more for people, so they're able to buy more goods, so to say. And that
Right.
confuses a lot of people because they only think of the buying pressure of the dollar. But when you weaken the valuation of the dollar, that weakens the pricing of product. And if you can do an outpacing, so to say, if you can make more dollars on weaker price of product, then you can buy more product. And
Right.
it takes a moment to understand that, because people only think of, $1 is $1. Well, no, not necessarily.
Not
It
necessarily.
depends on how fast you can work. So the M1, velocity of your money.
Yes, sir. And that's something to definitely pay attention to. And a quick thing that I did for a long time, and I'm kind of not doing it so much anymore, but I would look at UUP and how slowly it moves, and I would be able to sell month out credit spreads, $1 wide for like 98 cents, so risk of $2 per spread, and I'd set them up as a hedge. So if I'm caught with my pants down shorting SPY, I know that when SPY starts to reverse, the dollar's usually going to come down real quick. And when it does, if I have that spread open, I've had two occasions where I've actually taken nearly max profit from that position. That saved my butt because I was in positions that were generally bearish on SPY, and I ended up closing those for a small loss. But the gain I got from that hedge position killed it. And I was doing it for a little while longer, and it just kind of it just kept grinding up that chart. And I was just like, well, I can't sell credit spreads on top of this. I could sell put credit spreads, but for some reason the variation wasn't going to give me that really low risk. It was going to be more like $30 a spread or something like that. So I was like, it's not quite worth it anymore. So I had to look for another hedge, and I was just like, well, you know what? Let's look at durable assets. And essentially, I started looking at basically just like the silver ETF or something like that, and running credit spreads on either side of that. SLV was working pretty good for a while there, and then all of a sudden it stopped moving. So kind of interesting how the dollar can have such a profound effect on everything. And when you look at SLV, I was in it at a point where it was down to about 17.20, I think is when I was closing. I was selling credit spreads on the top of that as it rolled down, and now if you look at it, it's looking a lot like the bottom of the trend where you're starting to get a little double bottom going. I think some things are going to move with the dollar. I think that, yeah, you're right. It's going to hedge some of that inflation on the dollar and give people a little bit more buying power with that dollar. And that is a good way to look at it, is just look at everything that's going to be a what you'd call a durable asset and compare.
And I like that. And for those unaware of UUP, it's the dollar index there. And like I said, there are many different ways you can skin this cat on whether or not you want to play straight dollar when it comes to the FX market, if you want to play it in a currency future, if you want to play it on an index style there. It just depends on how you really want to skin that cat. But speaking of skinning cats here, I'm getting ready. I'm playing down on oil here. I'm opening a 10 lot, or already opened a 10 lot on oil here. And
Nice.
I'm looking to clear here at 84.80 flat. So we'll see if we get to that area. I got a market order out there for it,
Sweet.
and we'll see. So I've been short. I'm about 15 cent up here on that. I'm just letting them dance. If I start to see them really climb it back up, I'll clear the position. But right now we're really oscillating between that 85.10 and that 84.80, and that's what I'm working with right now. We've got an ATR, a 5-minute ATR on oil at 49 cent, but we have that news coming up here, and
Right.
I'll clear that position regardless when we come into news. One of my trading rules overall is that I do not hold day trade positions through news. I
Nope.
do not do it. I've been burned too many times on it. I got other people that do, but it's just not, and I'm out of the trade. Good.
Good
All
deal.
right, so that was a good little move.
I'm watching a Globex low get threatened here again, and it might just tip on the MES, but let's wait 7 minutes.
Yeah, I say that's all. And it doesn't hurt. It doesn't hurt to wait a few minutes, and if you're already flat in positions, there's no reason to hop into something or anything like that. Just let the market do its thing. And again, remember, it is quad witching. So about 1 or 2 o'clock, I'm looking for the acceleration of price here, and I'm looking for a market reversion. I may be wrong depending on these numbers, and that's fine. But you just manage accordingly and exit and enter positions as you need to go along with that risk.
Absolutely. I'm actually closing my SPY spread here for a 200% return as we speak.
Nice.
I'm all over that. Boom, done.
200%. Come on, man. Come on. That's rookie
Oh,
numbers. 2,000% or nothing. Come
yeah.
on.
Well, I opened them as spreads because it was a basically just a neutral position I entered. I entered call debit spreads outside the money with next Wednesday expiration, and put debit spreads out of the money next Wednesday expiration. The total cost of the spread to enter was, get this, $12 per fold. So I was so far out of the money, it was like $4 for the call debit spread and $8 for the put debit spread. and I was rolling lots of 100 of those, so it paid pretty nice, and it was very, very, very limited risk. And when you run those and you get that 200% return, you're just like, why do I need more? Done. Close it. There's nice profit there. I'm not gonna bat an eye at closing that. I'm not gonna sit here and try to ride this break. I'm looking at the MES as it's getting ready to break that Globex low, and it's pushing. But we still have a few minutes till that report comes out, and this thing can about face and rip a face off. So it's prudent
And
to
for
close that
the
position.
I've seen that before. So it'll be down, 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 down. We'll get a piece of news, and it just freaking rips 50
Oh yes.
points up on there. And I've been caught on the backside of positions like that before. And that's so people have asked for, well, Crew, when do you use a market order? When I
Yes.
want to get the heck out of Dodge, that's when I do it. So when you realize you were up 30 points, and now literally in the matter of seconds because of that news event, you're
Yeah.
now down 20 points. That's when you go, I should probably market out of this one. Boom, get out of it, lick your wounds, write it down in the journal and go, don't hold through news events. What's that one of Bart Simpson writing on the chalkboard? I will
Yep.
not hold through a news event. And that's the time I use market orders. But it's different for everybody.
It is, and when you see those big giant candles ripping a face off, what it is people can't get out of it fast enough. That's what causes that. Is everybody and their mother is hitting that market order button, and it's just amazing how fast that can walk up the book. And I can watch the volume profile, and I can see Bookmap in a volume profile on an ES chart. That's why I keep this ES chart with my MES charts, because you can see where all of the market maker orders are sitting. You can see them sticking way out. And when you
I've been a
know,
Bookmap guy for a long time. I love Bookmap. You can see so much with it. It makes your life so much easier to see those business zones in there.
oh, absolutely. And then to learn Bookmap and then apply it to volume profile while you're day trading the futures chart, man, what a difference! Because it's just you're looking at exactly what you'd see on the Bookmap. You'd see a big pile of orders sitting at a price bracket, and you're just like, strange that it's in an exact $5 interval for one. And then when you have the oddballs where you see right now I'm looking at 38.55 where there's a big order sticking out. You look at like 38.56 or 56.50 or some weird number, you'll see a little ledge there. Pardon me, my throat's a little sore this morning.
You'll see them scaling in or scaling out about that. And for those unaware, there is something out there. It's called fanning.
Yes.
Is what it is. And if you look at Bookmap or you look at TPO, time and price, it's a volume profile style on there, and you'll actually see a stair step of orders, and it's the way that it's entered into the market and to that
Right.
size. And typically they're BS. They're absolutely and utterly BS. They're literally just meant to pull a market one way or the other. And you got to
Absolutely.
think though, for the ability to do that, that is a lot of
Oh,
money
gosh,
on
yes.
board. That is a lot of money.
Yeah.
Keep in mind, one options contract is 100. Gives you basically 100 times leverage
Yep.
on whatever you're doing. So if someone has 300 of those on, or some people even run 1,000. I got a buddy of mine that runs 1,000 lots on the SPY, and I go, God, you're crazy. He went, no, I'm experienced. Oh, wait a second.
There's a difference.
Yeah. So that was always a fun conversation. But so that gives you tens of millions of dollars worth of exposure to the market. And someone told me the other day I had I don't know, it was like a 300 or 400 lot on the SPY I had on, and they went, you do realize you got like $4.5–5 million worth of exposure. I went, gee, thanks for telling me the number, Dave. So, it wasn't it's because I think about the market in percentages more than anything. We got about 30 seconds till news here.
Oh man, look at that tip over right through that Globex low. We're through that. That's where the ADR for the half ADR where Sig was talking about this morning.
They're just
pre-market.
testing it. They're
So
testing it.
about those orders, and you look at it when you get volume profile, you can see in gray here, you can see all the orders that have closed. You can see where the volume happened, where the trades happened. And if you look at those little spikes sticking out, where we're talking about them being BS, watch price when it gets to like literally one tick of that order. It doesn't close and represent with the volume bar of a trade actually happening. they'll jerk that off the book in a microsecond, and
Mm-hmm.
it's just there to draw price. So all the retail is going to chase those brackets. They're going to look at that ladder and be like, okay, well, the smart money's got a big pile of orders sitting here. That's going to be my target. No, it ain't. Just trade the momentum. So you look at that and you see it as like sort of a carrot dangling from a stick. You're just watching these market makers literally toy with the market to move that, and it takes tons and tons of money, like you say, and they can pull that off the book in a time that is faster than any one of us or even really powerful people can even trade. It's just so fast. And literally, you can watch price when you see where the odd numbers are. Like, if you don't see it sticking out in a $5 increment on the MES or ES, for instance, and it sits at a weird spot, just know that that's a carrot. It's literally just an object for people to chase after.
Looking here, Michigan consumer sentiment coming out at 59.5, so almost a point better than expected. That should be interesting for the market here. We can see the market turning back around, already up 10 points from that low there, ES at 38.62. This may be what we need to get the reversal here in the market to see things climb back up. Current low on SPY, 382.90, trying to reverse here off of that news and base. Going to be a nice little move here. Let's see if we can get some continuation on that reversal from the news. I do believe we're going to see a reversion to the mean style strategy on this, but
Yeah,
I like that. Jeremy, what do you think?
I like that too. I think reversion to mean is going to be a key phrase to speak to yourself in your head as you're watching this price action today. You can literally just draw a pivot on your chart and find that, and
Mhm.
just have it there. Put it in some bold color that stands out to you, so you just know mentally it's there. That's the mean, and then you can put your ADRs on either side of it, and you can watch the price action just kind of flop between the two as it passes either above or below the mean. Usually it will reject just before an ADR and walk sideways. And that's kind of what we're expecting on quad witching day. This is a day where a lot of market makers are going to be, essentially either hedging their position to be prepared to close those options, or they're going to roll them. Whatever happens, it's going to be an insane amount of volume, but price is like expected to not really go anywhere. So you're going to see some crazy volume spikes for really no reason other than the fact that everybody's just getting out of the way of the options roll.
I like it. I like it. All right, Jeremy. Well, it's 10 o'clock on here. I want to thank you sincerely for coming on today and doing this joint operation here. I think we've had a pretty good day. Couple good trades so far within the market, especially on this odd day. But I want to thank the BB community for listening in, and the Money.net community. Guys, make sure to hop over to their YouTube channel as well. Like, share, subscribe. And BB community, if you want to like, share, subscribe on the Money.net, we'd appreciate it as well. Again, we're nothing but one big family. And I was going to mention this earlier for those that are seeing the video. I did manage to find it. I found my old Bullish Bears
All
hoodie the
right.
other day. I was like, you know what? I love it. So I got to channel my inner Lucian. Sadly, he has better style than me. Always has, probably always will. So gotta love it. But Jeremy, again, thank you, man, for coming on.
Hey, definitely.
And we'll see you next time for the regular scheduled aspect of things next week. But if you ever want to do it again, you just let me know. And
Absolutely.
yeah, thank you for everything, man.
It's been awesome. I had a couple quick notes. For some reason, my folks in our Discord channel couldn't hear your mic, but I think it's because it's being split by Zoom, so Zoom's taking over. Same way with the camera. But just to let everybody know, this both sides of the conversation will be recorded on YouTube. So if you want to hear what Creed was saying back and forth, I apologize for not being able to get that in our Discord channel, but you'll be able to watch the recap, and it's only like a 3-second delay to YouTube right now for live stream. So shouldn't be too hard to manage. Although you probably want to shut one audio source off so I don't end up echoing in your ear as you're trying to watch it. But yeah, we're definitely interested in doing this more often. This is great to be able to have a multitude of heads together on stuff like this and be able to give a lot more information, as well as be able to provide a lot more value for everybody involved. And it's on both sides of the fence here as far as we see. It's just one big family, like you said. And when communities come together and we help rise the tide together, so to speak, the rising tide raises all ships. Well, the beneficiary is everyone. And I'm getting a flare on my lens here. But the beneficiary is everybody. What we can do to provide that value for you, and the more we can provide, the better it's going to be for everybody who's watching us. So definitely hit that the like and subscribe button, and get the alerts going. And also check out money.net. You guys do have a YouTube channel as well, so there's plenty of cool
Yep.
stuff on there.
Yep, we're starting to grow the YouTube channel on there. And ladies and gentlemen, keep in mind that every Friday at 12 o'clock market time, me and Jeremy get together and we talk about the week's trade ideas. We talk about what we're looking into for next week and try and pass on some good information. So you can find it on either of our YouTubes there at 12 o'clock market time every Friday.
Perfect.
Good
Yeah,
stuff.
I was gonna actually make sure I cleared that with you before I go. I was thinking we could do our Friday meetings. In the afternoon, we can simultaneously broadcast it just like we did here. That'd be kind of cool.
Absolutely. We're 100% cool with doing that. So I love it, man. It sounds
Right
good.
on.
All righty, ladies and gentlemen, we will see you on the next one. Again, if you have any questions, concerns, comments, suggestions, always feel free to reach out to either of us or anybody on either one of the teams. And for those in the Bullish Bears community and the Money.net community, you know what I'm coming from. As always, remember, your trades are in the history. I'll
That's
see
it.
you around.
See you
Stay
guys.
green.
Thanks again, man.